Yes, future crop reports. I want to talk with you about that. Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. So glad you could join us. And we love talking with you each and every day on these podcasts. Well, I want to remind you to like these videos, subscribe to them by clicking on that bell icon down below, and share these videos with others as well. Today, my very special guest is Joe Camp of Comstock Investments. Joe, the finish of the ag trade, the commodity trade here on a Wednesday, wasn't necessarily what corn producers wanted to see. Big drops, and this is in the wake of all the flooding that we have had recently. And again, I wanted to thank everybody for all the comments that they made on our Monday podcast, where they were chiming in and relaying their own stories about how the flooding has impacted them in the upper Midwest and the Northern Plains. Just heartbreaking stories, Joe, that we've been hearing out of that whole area there. And I'm sure you're hearing more of the same. And it's so frustrating to see the close that we had again in the markets here on Wednesday.
That's the word for it, frustrating. And not that you don't want to be objective and to talk about why a market could be going lower for so many reasons. Yet this does seem like, I'm not one to be like this, but to blame the speculators a bit for maybe following nothing much more than what their computers are saying on how the charts look, which is decidedly bearish. We could bring up a chart here to show you the close in it being so negative, but to dovetail on that and realizing that it is very much removed from what we see on the ground here from a fundamental perspective, the risk that we have of losing acres, of losing yield potential beyond the very personal toll that we know to have inflicted on farmers and the rest of the public in these regions that are flooded out. But you have that speculative influence really at play. And it's especially so this week, this timing factor being related to the mechanicals of another delivery period coming up for July grain futures. So if I could show you this chart for July corn, what we have here is a look at the July contract itself. This past year and a half, you can see that the price today fell below that low from earlier in the year, from late February. The contract gave way to that support point, and selling accelerated beyond that. And again, you can talk about speculators being heavily bearish this contract, forcing now decisions for those that are holding longs on whether or not to roll or to close. Still some of those, basis contracts being cleaned up, the reownership longs on behalf of the farmers that have to choose whether or not to ditch or to roll here. And that's ultimately a negative, just like it has been in previous delivery cycles. Now we can get beyond that and start to talk about what's next when we enter the delivery period, and how generally firm basis and firming spreads indicate that there's some scrambling for coverage on this old crop, or what's left of it, or what's available, certainly, which is a lot less when farmers don't want to sell in the face of this price slide. But I want to just focus on the technicals a bit more here. We looked at the July corn contract. Now this is the continuous futures chart, where we have not just the July up here to the right, but all of the previous contracts when they were the nearby, like the May before this, and ultimately the March before that. And that's kind of the negative picture that we have to start out with here. The fact that not only did we break to new lows for the July contract itself, but that there's still more room to potentially fall until we're testing continuous chart lows, which if we look back in that late February timeframe for March futures, we had poked just briefly below the $4 mark. So unfortunately from here, and we talked about that last week when we were eyeing this general area, that if we fall below the year's lows, we've got almost a pretty quick shot down towards $4 even.
Wow, that's a very telling chart. So let's talk about how we now stand. I'm amazed to see that we had that much of a drop, and it continues to drop, even though we had the expiration of the July options here the other day. And I thought maybe that would at least maybe stop the drop for a little bit. Once we got past that, it didn't seem to have any impact whatsoever, did it?
Not this time around, and it can be for that reason touched upon, where you have new positions potentially assigned for those short put holders for one. Ultimately, still a relatively high number of remaining July corn contracts that just have to be dealt with. And these speculators, if they're not short in the July still, then they've already rolled forward into a carry premium, albeit a shrinking one lately for corn futures, but still some higher priced months out there that these speculative bears can sit on and wait for that decision. Now, it can be the case as well that the end of the week, which also signals the end of coincides with the end of the month, and which is also the big report day. Potentially, we could see some short covering bounce, some position squaring leading into those numbers. We did have a taste of that early on today, but of course, it just did not hold.
I know you had brought up the 8 to 14 day charts for the forecast. And there's been a lot of talk here lately about all the flooding going on in the northwestern Midwest, northern plains, the upper Midwest areas. Looking at the 8 to 14 day forecast maps, it looks to me like it's going to be pretty warm, but it could be steamy and maybe still kind of wet. That doesn't really look like the trade has to worry about any drought.
No, that's the continuing theme of it. Unfortunately, if you look in the Western Corn Belt where we've had these issues as of late, it's another darker green type of spot where they're convinced we'll have wetter than average type weather persisting. As also mentioned, though, the weather is warmer than normal in most of the country. Now, that is no surprise. We've had a call for that for some time and still continue to have this outlook for the rest of the summer heating up continuously. That splits the country into two certain variables where you have continued flooding and a really soggy, wet crop if it's emerged in the West. Whereas the East, where it had recently dried out, maybe finding some showers starting up off and on with storms this week, including Illinois, Indiana, and Ohio, where we'd start to be a bit stressed here lately. And so, unfortunately, I know I'm sick of saying it already this year, the rain makes grain adage, but when you link that back to the speculators and them remaining bearish here, that's their focus. On top of the bearish technicals is that, well, they're getting rain in a lot of the country where it's going to be conducive to better crop potential. And that's the story we're going to run with at this point. But I look at this forecast, again, being split so extremely like it is, east versus west, south versus north still. And one thing I'll look ahead toward is what is high variability that does not support record yield potential, and that can come into our expectations for prices potentially being supported by future crop reports that would start to pare down these yield estimates.
Yes, future crop reports. I want to talk with you about that. Okay, it's almost upon us. We have the USDA reports that are pretty high caliber coming out later on this week. It'll be before we get to the Independence Day holiday. It's the much anticipated acreage report from USDA, and also it'll be a quarterly stocks report coming out on Friday. They will come out at noon Eastern time, 11 o'clock Central time. I know you've had a chance to kind of gather some average numbers that the trade is anticipating may be in this report. I think you have a table for some acreage estimates based on guesses by the trade. And I wanted to get your thoughts on this, and maybe you can help explain this for everybody, because the acreage estimates, a lot of people are saying, well, we're not going to have near the acres because of all the flooding and abandoned acres and everything. However, this is based on data as of the first of the month, right? That would have been before all the flooding even took place.
That's right. And so there is an argument to be had, though, that before the flooding took place, we were, these areas dealing with the flooding, as I know we've recounted here, they were coming off of a record month of May. So that certainly can impact, and did, the planning effort this season. I look back towards a couple of years ago, in 2022 is the latest example, and it's a conversation you and I had last week, which is a question about, is there the possibility for a resurveying of acreage? And I think even before the flooding here this last couple of weeks, there was warranted a need for the USDA to get back out there because of how these report surveys take place during the first 2 weeks of June. And because how we know, talking to farmers in South Dakota or Minnesota or Northwest Iowa, they were still trying to plant beans there. And that's, again, something that last occurred in 22. They have the precedence to say, we're going to go back in there and resurvey these acres. And then in future reports, we can continue to not only see potentially acres lost, the prevent plant before you have this flooding, and then ultimately the impact of the harvested acreage as a percentage of the total plantings coming down because of loss here just recently. I mean, we are talking about hundreds of thousands of acres, potentially reaching up towards 1 million when you add up not just southern South Dakota and southern Minnesota and northwest Iowa, but also parts of North Dakota and northern Nebraska. And that's a big region, needless to say. But you look at these estimates and you see where the surprises can certainly come in. Corn thought on average a little bit higher than where the March estimates were, but yet still decidedly lower than a year ago. Soybeans down a little bit from a year ago, but up also from the March prospective planning survey. So it's a big source of surprise. That's why everybody's got to focus on this acreage number. I look at the range of estimates. One notable idea here would be that from 89 to 91.3 million acres, depending on if we go up at all, we're looking at the carryout estimates absolutely riding on this first piece of information. If we stay steady or go lower with corn acres, like I think could be justified, then you're already looking at old crop ending stocks back below 2 billion bushels, and probably the same for new crop.
Well, let's take a look at those grain stock estimates then. That will come out at the very same time as the acreage number from USDA. So on the grain stocks, it looks like you have an average guess on the corn at 4.87 billion bushels. Last year was 4.1. Okay, that's a lot of grain on hand. But is that subject to change quite a bit? We have sold a lot of corn here lately.
Absolutely. So just in general, these averages for corn, soybeans, and wheat up 18, 20% from their year ago values after a bigger crop recorded in general. But the bias that we have here so far leading into this report is maybe expecting that these average trade guesses are a little high, particularly for corn. Our economist Dan Monternock doing the analysis in our recent Comstock report to suggest that this would be representative of much lower usage than in comparable quarters past. And in fact, as you just alluded to, we've had really positive numbers on demand, whether it's corn exports and the huge surge in business with Mexico that's really pushing the overall trade total higher this season, or corn ethanol, which has been boosted here again as of late with positive margins and something that we're talking about in reflection of stronger basis, strong soybean crush, some worry about exports, but yet not tracking below at all where the USDA would peg us. So as always, the focus is on the acreage, but there's potential fireworks on the stocks as well.
Let's talk about the overall close on the market we have. Okay, corn in a big downtrend. You have soybeans in a big downtrend. Wheat has pretty much been in a free fall for, a month straight or more. Where's the bottom? I mean, do you think that we are at a point to where maybe the funds will do some profit taking before we get into the holiday, 3-day holiday coming up?
You would expect so. The technical aspect of it is that, again, it's in their favor to continue to trying to defend these short bets while they're working, to say the least. And so that leaves on the chart these major money marks. We've talked about it for corn. It's $4 even, just below that low on the continuous chart. It can become a case of where you get to these key levels. The funds have already rebuilt these huge, almost record net short positions. And then they look around and it's like, who's going to sell it now? Let's not be the last one to take profit. And then it's a rush for the exits that ultimately produces a bit of a pop that we can use on the marketing side. You have for soybeans a similar story where the nearby is going to go off at a really strong premium, but everybody's watching now this new crop November contract as it put in a low today, just 3 cents above $11 even. We did poke below that here recently, but we're now talking about levels not seen since 2020. So it can become a point as well where we're saying just looks a bit cheap. The risk is more to the upside. So let's cover shorts for profit in terms of the speculator position. And then for Chicago, we getting awfully close to $5 for the Chicago contracts. And after this type of slide that we've been in, you would think some profit taking, some retracement of the slide eventually likely.
I misspoke. I apologize. The 4th of July is in the middle of the week this year. So it won't be 3 days in a row, but it will be like 3 out of 4 or 3 out of 5 days here, trading days. So anyway, yeah, it'll interrupt things. That's for sure. Usually every time you get to 4th of July or Independence Day, it seems like there's a tendency to change the trend of the market. I don't know why that is that time of year, but it just seems like the markets like to do something different. Cold storage numbers came out. Tell me what they revealed.
We had that as a mostly what we call supportive report, and you can see that reaction most particularly in the hogs. Even though the cattle rallied significantly at the close, I think the story for cold storage more linked to this rally on the hogs, ultimately an outside day up. So a little pressure early, but then a reminder after that report that we're tightly stocked heading into the summer and still thinking ahead that production will slip from here. That being the case, it's been such a long slide down. It doesn't take much, like we saw with the hogs, the total stocks in cold storage for pork down just more than 9% from a year ago. Again, heading into the summer months, we can say that retailers are well stocked up being so close to the 4th, but I think at these relatively lower price levels with pork, especially too relative to beef and the way it's priced, we're going to have a still strong summer ahead for consumption. For the cattle, it was also a mostly supportive report. We were down just fractionally from a year ago, but still against historical averages, pretty slim heading into this summer. And the consumer, I think, well enough position for now that we're going to keep eating meat.
And we don't get a mid-year cattle inventory report now this year. So no data in that regard. And with the high placements number a while back, it seems like maybe a pretty solid platform underneath the cattle market for at least another year, doesn't it?
Yes, because you look back at that cattle on feed report and what would be perceived as a bearish report because of the placements being high. But then again, it's another reminder that, hey, wait, let's pump the brakes. Actually, we're probably not retaining the heifers like we thought we saw some signs of. And that further delays the herd rebuilding effort. And here that's friendly down the road at the same time that you just cannot ignore the way the cash market is trending at record values, $200 live sales in the north, and yet this June contract coming off the board in just a couple of days, so rallying sharply as it converges upward towards that cash market. The beef market has to hold up here, and that'd be the only caution as we talk about the 4th of July coming up so soon. That has been not just for the grains, but for the meats as well, and cattle for sure an inflection point. Last year it was a more negative turn after a good run for beef prices the second and third week of June. Eventually we took a bit of a break after that.
Well, Joel, again, I appreciate you taking time to talk with us and break things down as they may be affecting the markets and kind of preparing for the big reports coming up on Friday. That's Joe Camp. He is with Comstock Investments. And again, I want to thank all of you for all your comments that you have been sending in and posting below our videos relating to how conditions are in your part of the country. Please continue to send those because we love hearing how things are where you are. Hopefully you're able to come out of this flooding issue in good shape. Hope it's not bothering too bad. Some areas are having drought problems, some areas wind damage and that sort of thing. But we love hearing from you. Thank you for joining the conversation there. I'll let you go for now, Joe. We will talk later. And that'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.